see you again, Jennifer. Welcome.
Thanks for having me.
All right. So what is is work from home the biggest headwind? I feel like there's a theme here today.
Yes, that's definitely going to be one of the themes that we're watching, and it's definitely regional. We'll have some areas that we expect to perform well, that are seeing a lot of growth and a lot of in-migration. And then we're going to have other areas where we think there's going to be some weakness and probably some turnover in some of the commercial, particularly office buildings. And the question is, what is the impact, both direct and indirect, on the local municipal credits in that region?
Do you think that's why people are pulling money out of munis? I wonder if it's just a yield thing where they go, I used to be in munis because it was the only thing that offered yield, especially tax adjusted. And now I can go into T-bills. And even if it intellectually doesn't make sense, it still feels good to get 5% instead of 3.5%.
Yeah, we still feel pretty confident that even if there is some sort of slowdown or a recession of any type, we still expect the municipal sector to perform well. We have historically lower default rates and higher credit quality than many of our corporate indices that we're often compared to. So we still feel like this is still a safer, less risky area of the market to invest in.
Were there any lessons from 2011 or kind of the age of austerity for munis? Because I tend to think of them obviously as more state and local versus federal.
Yes. So I think definitely there have been lessons that are learned. And I thought we saw during the pandemic, when there was so much uncertainty, a lot of really prudent financial decision making, of course, helped by the significant federal COVID aid, but it allowed a lot of municipalities and mass transit, all different types of sectors, to try to sock away money, take advantage of the money that was flowing in so that they'd be prepared for the rainy day. And that might be what we're about to see. So they've performed well. Let's see if they continue with that good governance and financial decision making if things slow.
How distressed are munis for areas, exposed to major work from home shifts, like, New York City subway bonds? I think they just delayed an offering this week, although maybe that was a yield timing thing. San Francisco, the obvious candidates. What are the yields like there? And is that a place you think investors could, go out on a limb and ride it out, or should they stay away?
Sure. So we think there can still be opportunities within pretty much any sector in any region. And it's really important to kind of peel away the onion and see actually what backs the bonds that you're interested in purchasing. Sometimes you're not actually exposed to the direct revenues of fare boxes, as an example, for the tickets that you buy to ride mass transit. So it's important to look at those and understand that and recognize there could still be opportunities to invest in something that maybe has a tax-backed repayment stream or state and federal aid.
Right. And usually people go, okay, well, you know what? Healthcare, that's recession-proof. That's a place I'll go. But in Muni speak today, that's a place that has you a little bit concerned, right, because of the loss of that federal COVID aid.
Exactly. So that's another area that we're looking at. And they, just like all of us in our personal lives, are impacted by, higher costs and inflation. And for healthcare, they're seeing it quite strongly at the employee level. It's very difficult to find employees, particularly nurses. And so hospitals are having to tap into contract agency type of employees, essentially traveling nurses. And that's far more expensive than having somebody on your own payroll. And so they've done that to meet the needs of their community, but it's definitely eaten away at operating margins. So we're waiting to see hiring improve and getting a little bit less reliant on this contract aid.